Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on StockCharts, we'll look for long time frame trades. Please subscribe to my articles and Twitter feed and gregschnell.com. Thank you for taking the time to join me. The main problem with the bull market is uphill all the way, and we're at the top of the hill again. So we're going to be working our way through that over the next week. That's a big part of the agenda. So we had, since Thursday, we popped up 60 S&P points, and over the last 2 weeks we've come up 120 S&P points. So some things are definitely starting to improve. But we've also got some big things to worry about in terms of, we're at the 3,000 point level again. So this is kind of like the third or fourth time we've come up to ding this bell, and we'll just see if we've got enough thrust to go here on the back of these earnings. So the other things that we're interested in, retail sales this morning came off. They were down 0.3 rather than up 0.3. That's kind of a big deal heading into the holiday season. But JP Morgan's credit card data was pretty good. There was lots of spending there. So it looked like the consumer was still intact. So broadly, things are okay. We just got pockets of weakness like manufacturing and stuff like that. On JP Morgan's news yesterday, the financials started to break out. So we're going to roll through those financials, because if the bond market continues to revert, these bank charts could be a nice place to play. Bonds keep rolling over, and IPOs, things like Uber were up 10% on the last week. So we're not going to spend a lot of time in the IPOs area, but I want to cover the financials off just because I think it's such a critical point in this bond cycle. And if we get the inflection in the bond cycle, we're going to go back into the bank. So let's jump in here. So let's start off, first of all, here's the S&P 500, and what we're looking at is a 60-minute chart with an uptrend here, and the momentum is just starting to wane here from the highs we hit late Friday, and that's not a big deal. Again, a 60-minute chart is nothing to worry about, really. It's just kind of giving you an idea that we're going to ebb and flow. But my point was, as we reach this prior peak again, we're going to ebb a little bit here. We really do want to see this daily momentum not stall around the zero level. We want it to get way, way, way stronger. And so that'll be an important thing for us to watch. And then when we go to the weekly chart, obviously, what we're looking here is we've had declining momentum. Let's just turn on the Zoom box. And on this declining momentum, what we're trying to get here is, another turn up in momentum. The most recent one came up, touched, and pulled back. Now we're trying to rally back up again. So it's not giving up easily, which is good. We'd like to see this rally break out here. So anyway, one of the areas that I've liked is the banks. And the reason that I'm interested in them, first of all, is they've been going sideways for a long time. So if I sort the banks based on what's performing well, interestingly enough, look at this. Lloyds, Barclays, and Royal Bank of Scotland have all moved to the top of the list. And I haven't changed the number sort order. I'll do that right now with you. But the idea being, rather than having it sorted the same all the time, you want to move that around. So I sorted it by the scooter ranking. And so when you click this rank, the problem is we've still got the old ranking here. So as soon as we go into the 10 per page mode, we won't get the strongest ones first. So Lloyd's should be first. It's going to give us the old sort we had, and it's based on the numbers at the front. So we need to edit that list. We need to go to the very bottom and just select all of the charts and then remove the numbers from. Okay, and now we want to go back to the summary mode. And then from summary mode, again, we're just going to sort it on the scooter ranking here, and that's going to populate the charts in the proper order. And with that, then we go down to the bottom again and just hit number in sorted order. That makes it very easy. So now the charts will be set up so the strongest charts are first. And now when we jump into this 10 per page mode, look at this, the scooter ranking has popped up. And I mean, some of these European charts, I mean, they've been dying for a long time here. And look at the bounce they had last week and this week. So as the Fed has not announced quantitative easing, but is easing, we are all of a sudden, all of these bank charts are starting to accelerate higher. So this is a meaningful thing here, where we're really seeing these turning up. These downtrends in all of these momentum indicators have all started to flip. Here's Barclays breaking like an 18-month downtrend. PPO about to go positive. That's very, very bullish. Here's Royal Bank of Scotland. Hasn't quite broken through this downtrend in price yet. Has broken through the last 6-month downtrend, and momentum is trying to go positive. But you can see the scooter ranking on all of these has started to soar. The ones that were leading, like Equifax and Moody's and that kind of stuff, I expect them to keep rolling over and money just rotate within the financials to some of these other ones. This Canadian bank, Bank of Nova Scotia, big horizontal downtrend going back almost 2 years or 18 months for sure. And now we've broken out of that trend. PPO's in positive territory and moving higher. What's not to like? These charts are improving. ICICI Bank, this one just consolidating tightly. Would like to see the PPO start to turn up here. These are the exchanges. Again, they were some of the best performers, but we'll look at the full stochastic starting to weaken here. So while these other ones are starting to turn up, these are turning down, and I described that a few weeks ago. But I think it's incredibly important timing to be aware of the change in trend as it happens, and these banks are all starting to flicker. So we've got a nice uptrend in JP Morgan, and the PPO is starting to accelerate. It's just breaking out of an 18-month trend. Now, one of the things to postulate about, let's just go back, not that chart, I want to get this chart. On this chart, let's just take it to 15 years, maybe. 15 years is enough. And then I just want to get rid of all of my indicators, clear all, so that the chart is bigger. But what happened in this 2007-2008 period, just to work an example here, this is October, this is March, and so over an 18-month period, we've fallen hard. Then we come through this whole 2010, 2011 period, very choppy, wild trading action. And then we went through the quantitative easing period where everything just kind of calmed down. Even in 2015, 2016, we spent pretty much a year going sideways. Well, now we've spent about 18 months going sideways and haven't really made any upside move. So one of the things you can do is you can consolidate in time, and you can also consolidate, so the price goes sideways rather than falling hard. And we did have that 20% plunge in there, so maybe that's enough. But the point would be, as we're trying to break out here, we're 21 months later from January of 2008 to October. And over that period, we've, 2872, and we're up about 100 points, I'll call it, less than 5%. So with that slight move higher, we're trying to get going, but in general, we've consolidated sideways. The thing is, after a long time goes by, eventually things start to break out again, and we're starting to see that in the banks, which I think is particularly important. Obviously, having watched the banks fail in 2007, 2008, that was a scary time, but we're not seeing that now. All of these banks just consolidated sideways, and even with the low interest rates, are starting to break out. I think that's amazing that they're already breaking out. We're only a couple of weeks off the lows in the interest rate. So here's PNC, and this one's obviously turning up, and it wouldn't take much. It just needs to get above 143.15, and it's at 142.63, so it needs less than $1 to get to new 52-week highs. SunTrust Banks, this one had already made a new 52-week high, or very close. Anyway, it looks like it's ready to perk up to a new 52-week high. So when you see all these banks as a group starting to break out, they're at 11-month highs or that kind of thing, all of a sudden they're ready to pop. If this is what follows through, I think it's a pretty important place to be aware of the temperature change. And again, as the interest rates changed back in 2016, these things went on a big run. We're starting to see a lot of these banks, like the scooter ranking hasn't been up near 75 on this bank for almost 2 years. and here we are back up there again. So the charts are definitely shaping up. Here's BNP Paribas out of France. Just needs to get above 27.57. It's sitting at 26 and change. So again, not a whole bunch of room required for all of a sudden all of these banks to start hitting new 52-week highs. And if you're a momentum investor, you want to buy stuff hitting 52-week highs. If you're a value investor, you want to buy banks because they're relatively stable in your portfolio and you get a yield and all that kind of stuff. All of these banks, while they might not be cheap, they're still all breaking out. So here's Royal Bank. It's been spending 4 or 5 weeks here trying to get going, or RBC as most people know it now. And USB, this one is really chopping through here at the same prior levels here, going back 3 years and trying to push out. So I like these charts. They look very good to me. Anyway, if we go all the way to the bottom, we'll just finish this group of the top 20 here. If we go all the way to the bottom, like here's CBOE Holdings, just as an example, look at how the full stochastic is starting to weaken. So when everybody was worried about the financials, they were hiding in the exchanges and in insurance and stuff like that. Now within the financial group, it appears they're rolling out of those names and they're rolling into the banks. And so they're staying invested in the sector, but they're rotating what they were in within the sector. Okay, let's just go look at some of the ones towards the end here. So Bank of Beijing, this is starting to turn up a little bit. Bank of New York Mellon, this is still pretty much a downtrend. I don't see anything there, but the PPO is making higher lows and higher highs, so that's good. Morgan Stanley, amazing to find that one at the end of the rainbow here. Down for 21 months, consolidating again, really for the whole year. It hasn't gone any lower. So, unless it's really going to start to take a leg down, this looks more likely that we start to climb up here. It's trying to move above both moving averages again. State Street Corp, this is only at 6-month highs, but look at the PPO making higher highs and higher lows, telling you momentum improving on this base. So you have lower highs in price here, higher highs, higher lows in the momentum indicator, now higher highs in the momentum indicator. So we would expect price to start to accelerate here. Comerica is still pretty much a downtrend, but we are breaking this long downtrend in momentum as well. I like that a lot. SVB Group, same thing, big long downtrend in momentum, same thing in price. Just want to start to watch that behave a little bit better. Jefferies Financial, that one's still drilling in the bottom corner. Charles Schwab, amazing. You lower trading costs while your stock has been falling for a year and a half. But anyway, they did. It's now zero commissions, and so the market is trying to rally on the news. And I think somebody said, well, since they announced that the stock is up 7%, I would say, okay, well, last week it was still at new, 3-year lows. So let's not get too excited about zero commissions. Franklin Resources, this one's sitting here near 4 or 5-year lows. Invesco, again, way down in the bottom corner. So just to get an idea, even the bottom ones are trying to improve, but E-Trade, that's an ugly chart. TD Ameritrade, so all of these companies going to zero commissions. And I think this fall on TD Ameritrade was actually when Charles Schwab announced they were going to zero, and then TD Ameritrade said they would as well. So up since they've announced that they're going to have zero commissions, but let's face it, a lot of investors at $50 would have liked to have gotten out there. Affiliate managers, this one's down and to the right. So there's still lots of ugly charts. A lot of those, self-investing sites like Schwab and TD Ameritrade, those ones have been ugly for a while. So it's interesting they introduced lower fees while their stock is so hurt. Okay, with that, we're going to take a quick commercial break and then we'll be right back. And when we do, I'm going to roll through some of the IPOs because there was some action there that's starting to improve, and we're going to cover that off. Thanks, everybody.
Hey, sorry, the setup completely changed for me on this live stream box.
No sweat.
But I can fix it in the record, and because we have it fully recorded, I can fix it for YouTube.
Okay.
And for future plays on our channel.
No sweat. Um, okay, and what time are we? How many seconds left?
Still done at 29:40.
No, okay, that's fine. And then at the end of the commercial, you'll wind me in here.
Yes. And we got 10, 5, 4, 3, 2.
Okay, welcome back. So I want to talk about some of the charts that are starting to look better, and Slack was one of the ones I was going to mention positively till this morning, when it's down almost 7%. What we had seen was we're starting to get some of these trying to make a run up here. Now we'll see if they can make a higher low and start to go. Normally what would happen, last week, I think CNBC exhausted coverage of how bad the IPOs have been and how terrible they are and all that kind of stuff. And I just find sometimes when there's maximum momentum to the downside, so all of the terrible coverage, all of a sudden things start to improve. So here's Uber, and Uber was $29 just 3 days ago and is $32. So that's a nice 10% move already. It is trying to break the downtrend. If we just click on this, add a few more months, and what we see here, if we just drop a line on this chart, so it is breaking the downtrend, and we're starting to see, better price action down here. We have a lower low in price, but we have a higher low in momentum. That's the kind of positive divergence we're looking for. So this chart's actually setting up pretty nice, and I think um, whatever. If you're not an IPO player, that's fine. You're still going to have some chop down here. You probably, safety says you want to buy it as it breaks through this 35 level up here. Sorry, 35 level up here, and just let's put a dotted line there. And if you start to see that much improvement, I mean, that's 20% off the lows already. I don't know if you want to wait that long, but this chart's, I mean, there's a lot of people playing with interest in this chart. So I think there's some reasons to start watching this space. Okay, let's roll back into the Peloton. So Peloton really spiked up yesterday. It was from 2150 to 2350, so a 10% move, and pulling back slightly today. But again, I still think there's lots of interest going to start to show up in this one. Lyft hasn't broken the downtrend yet. It's close. Let's just go in here. The reason I'm so focused on talking about these all of a sudden, and I haven't been in the past, is because all of a sudden there's been so many of them that have performed so terribly. It would be nice to, just be ready if these are going to start to turn. I think you might remember Facebook I think it went all the way to 100 and back to 25 or something, and then built a base down there. And then when it broke out of the base, that was a really meaningful place. Usually stocks that start surging 10%, like we just saw on Lyft, or sorry, on Peloton yesterday, um, that's a good reason to look at these charts. So I just want to, sorry about the scrolling. Here's Peloton. Yeah, so we had that 10% day yesterday. 10% days, it's not always true, but 10% days usually means somebody's still interested in the stock. And it's just a good clue to, start looking for stocks that are reacting well and putting in these big moves. Now, haven't seen it out of that one. Pinterest, grinding sideways here for 4 or 5 months near the lows. Can it hold? This Invista Holdings is breaking out topside. Smile Direct Cub, apparently this one's the worst performing IPO. And, $21 to $9, that's 70% off. Some people thought it was a pretty good idea up here at 23. So really traded poorly on the first day, and then it's been falling ever since. You got to wonder at 70% off if there might not be some value show up there. So I'd be looking for some, higher highs to start setting up here. And maybe, if we just take, I think this one, Let's go over here and we'll just put it on a 60-minute chart. And one of the things when you're trying to find a low, what you'd like to do is move to a shorter time frame and start to see if the chart's improving at all. And in this particular case, you still have a river down. There's no reason to rush in. But if this is starting to get above 11, I mean, you've got positive divergence on the lows here. And again, this is micromanaging. I like to look at weekly charts, but you're trying to find a change in tempo. And the first place you're going to see it on a 60-minute, then it'll show up on the daily, then it'll show up on the weekly. Okay, Zoom Communications, this one's still a river down. Lots of volume yesterday. Must have been something like, um, the insider's day where more shares get released or whatever. The stock is just gently trending down here. It doesn't look like it's having a euphoric bottom moment or anything, so I'd let that continue to rock. Sundial Growers, I think, is a marijuana name, and it's been chopping for 2 weeks, so at least it's trying to find a low. I'm still not enamored with the group over there. They've got a lot of earnings to come out this quarter and quite messy stuff. Real, this one is working better. It's been uptrending for 2 months now. Cloudflare, this was a big IPO, and all of a sudden you're down here testing the lows. Hasn't even been out, for 26 days, so we don't even have a start of a PPO yet. Datadog, this one rolled over too. So anyway, they're not all starting to improve, but I started to see Peloton jump. I started to see Uber take off. Again, if you've got a list all set up, then you can start farming the list and just working through it to see if there's some value there for you. Because once these charts get going, I think this Chewy, they have they do a lot of customer service work over the internet, keeping track of the dog's schedule and doctor's appointments. You can do a whole bunch of stuff on their site. But anyway, this is a pretty interesting IPO just because the margins are so big in pets. And the other thing that we find, I think we'll all remember, is some of the big box stores that were Petland and that kind of thing, those stocks did really, really well for their early while, and then they faded off. And it wouldn't surprise me that Chewy takes off for a while and then ends up becoming a really big story and then rolls into oblivion someday in the future. But for now, you probably want to be looking at it. I mean, this is starting to make just about new 1-month highs here. That's probably a place to start thinking. Frequency Therapeutics, that one's pretty wild for me. Apri Therapeutics, Vale Bio, all of these are quite volatile. So here's Spotify, and I know my daughter listens to this religiously, but anyway, you got a 2-month downtrend here starting to break. It spent 2 weeks, hasn't gone any lower. You're seeing momentum finally start to improve. I guess we could open the chart up a little bit more now. And yeah, that's pretty much 2-month downtrend. At least it's starting to base here, and if this could start to turn up, that might be worth looking at. For me, it's one of those stocks that I don't really like just because I think there's so much competition in the space. PagerDuty, again, winding down here. Okay, so I've given you some ideas about what we're looking for the banks. Again, I think they're all, some of them are starting to break out to new 52-week highs. That's pretty bullish. On the IPO space, we're trying to see some basing, starting to see some improvement in the price action there. We wanted to watch heavily in the commodity space, and I'm just going to roll through. So this is a chart. I have a screen in my office just mounted vertically, and I like to look at it. So this is the 100-period moving average on a 60-minute chart. And just you can see when everything falls below. So when the VIX falls below, the S&P kind of rises above, and they move pretty much as a package together. We're trying to get through this 3,000 level, and we've got a nice uptrend going here. This is the momentum uptrend I showed you on the first chart of the night, or first chart of the morning. And then here's CompQ, and you can see this is trending up nicely. Blues and greens, still working its way higher. Here's the Russell 2000 ETF IWM, and it looks like it's ready to break out to a new high. So they are trying to push back up here and keep going. One of the things that's a mystery to me is you can see the TSX line is sitting right here, and it is very odd for the S&P 500 to have moved up, significantly off its lows, roughly 120 points. And on that day, the TSX was flat to down, and yesterday you got the US market had a big up day and the Canadian market had nothing going on. That's really a surprise to me, and it doesn't mean it has to, but the financials are improving. They're a big component of the Canadian market. They're breaking out to new highs. I'm puzzled why the Canadian market is not participating. So if there's one big shock absorber towards my market optimism, it would be that, why is this one struggling so hard when, we had a Dow 450 day pulled back, closed at 300. Another nice day yesterday. I think it was 230 or something we closed up, and yet we got no price action there. So I'm a little bit puzzled why a big trading partner of the US couldn't do well. And last week, Canada and the US didn't participate, or sorry, Canada and Mexico didn't participate in the US rally. So really kind of odd. Natural gas moving back above this 20-week moving average, or it's roughly the 20-day moving average, and you're on a 60-minute chart here. So it's moved above, and then USO, you can see it's not doing anything. It's grinding sideways, but at least it's finally trying to put in a base here. We don't want to see oil, West Texas, the live price drop below $51. That would mark some major selling. GLD is winding down here. Just again, you can notice GLD and TLT, those two are following each other, stepping stones together. And the interesting part is for gold to fall while the dollar falls. That is a bit of a surprise, but the dollar continues to migrate slightly lower. I do want to talk about one thing here, and that is just that I'll be speaking on Saturday. Let me go to the schedule. I'll be speaking on Saturday at the Canadian Technicians Day, October 19th. And, we probably got 5 speakers. Each one of them's worth about, worth your time to go listen to. But we have 5 good speakers, and it's only $35 for the day. So if you've got any time for that, you can go to csta.org, and there's an online button. If you sign up, you'll be able to get the recordings after. I think one speaker you haven't heard here on StockCharts TV before is Jeff Hirsch. So he'll be speaking at this. He's the keynote. Tom Boley will be there with earnings beats. I'll be there speaking on commodities. Barry Powley will be there speaking on the U.S. sector rotation and review. And Dwight Galusha will be speaking on the how to get better results out of your scanning. And I think that's a pretty valuable one. Just one trade can make $35. So I think any one of those could be an important component. So thanks for taking the time to join me on Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern, 7:30 a.m. Pacific time on StockCharts TV. You can also catch replays on the StockCharts YouTube channel or on StockCharts TV, which has a running list of technical charting informational shows. And with that, GregSchnell.com is coming up. I have finally got the payment systems working, so that site will be going live shortly. Thanks, everybody. Bye-bye. This is a brief demo about how to scan for things that made a new high earlier in the week or the month. Rather than using a daily scan, which would say that it didn't make a new high today, by using a monthly scan, it'll get anything that was above this previous time period. So to do that, we go into technical scans and we create this month's high is greater than last month's maximum over the previous 12 months. I've also set it up with a close greater than $5. But when we run that scan, obviously it brings us our data, and what we can do is we can sort it into industry and sector, and Buckle was the current stock that I had up there, but look at how many apparel retailers are also hitting new highs in this current month. So this would lead you to believe that there's some strength in that sector.